All right, guys, the recording has started. Welcome to this short little class. I'm going to be recording this on OBS. You guys in the Discord cannot see my face, but if you guys want to go back and rewatch this video, you'll be able to see my face. I'm talking right into the camera. But for those of you in the Discord, you'll be able to see my screen. Hopefully you guys can see my screen. If you don't, let me know real quick before I move on. But this should be a good little meeting. I'm excited to just go over the basics of market net flow and gamma exposure levels. I use these almost every day, so those of you guys who are familiar with what I do in my alerts and just my overall analysis, I go through it pretty much every single 15 to 30 minutes. I feel like I have an update of some sort because there's always data that comes out in the market, and that's what I love about using data in my trades, because there's always changes, and for the most part it's pretty accurate. So let me get into what I'm looking at here on my screen, and then I can I can move on to the gamma exposure levels, which I talk about a lot too. So on this screen here, you see the option market summary. This is basically the screen that I look at not 24 hours a day. That's a little over exaggerating, but through the market hours, I look at this screen. There's always movement in call premiums and put premiums. So what market net flow is, it's the net flow of all of the calls and puts in the entire market. So what net flow means, it's all the buys and sells of calls or puts, and that's what you see indicated here on this of this line here. So let me just get rid of the puts so I can explain this. So this is the net flow premium of all the calls in the entire market for just today. So when the market opens, it's just a blank screen, and then within 5 minutes or so, you start seeing some net flow coming in. So this was the beginning of the day today, 10/9, which is October 9th at 9:31 a.m. Eastern time. So you can see we kind of started off with calls heading down slightly, but then shortly after, about 15 minutes after the market opened, you could see that calls started to come up a little bit. So again, what the net flow is, it's just the buys and sells of calls in the entire market. Now, what's cool about this tool is it doesn't track the ETFs in the market. So ETFs, there's a lot of hedging that goes on, especially with market makers. So it kind of confuses a lot of retail investors into buying those things. In reality, they're just hedging their positions, whether it be long or short. So what's cool about this tool is it shows everything, Microsoft, Google, Amazon, all that into one little chart for all of us. So yeah, it takes out SPY, SPX, QQQ, all those which are used for hedging purposes. So for today, you could see that call momentum picked up. It was okay in the morning, but you could really see the momentum picking up towards 11 a.m. Eastern time, which is kind of where we had a big buy up in the market. You can see that we broke above this high a day at 429, and we kind of continued up for the rest of the day and started flow kind of was up there as well. So before I move on about market net flow, move on further, do you guys have any questions about market net flow in general, or what you're seeing on this chart? Let me know in High Roller, or just turn on your microphone here. I hope I explained that a little bit well. But yeah, this green bar are calls, the net flow of buys and sells of calls, and then the red line is buys and sells of puts. Just for today. This is just today's chart.
Can you go over really quickly just what the gamma number means and how to interpret it?
Gamma exposure? Yeah, I'm going to go over that after I go over market net flow. This stuff? Is this what you're talking about? Nick?
No, when you're looking at the option tree and you're looking at which contracts to buy, it'll tell you the theta, the delta, and then the gamma. Can you go over what that gamma number means?
Yeah, I can go over that. After I explain that kind of coincides with gamma exposure, so I'll go over that after that. Just remind me once I'm done here, okay?
For sure.
Okay, so just going back to market net flow, one more thing that I needed to add about this chart. Actually, there's two things, and then I'm going to get into my strategy of what I look for in each trade, and then I can go over the example of today's trade. But this white line is just so we compare market net flow to the price of SPY, which is the S&P 500 ETF, and that's what this white line you see on this chart. It's just the price of SPY, so it has no correlation with the green or red line. The green or red line correlate together. That's the flow, and then the white line here is just the price of SPY. So don't confuse yourself when you're looking at this chart. It's just to see kind of where SPY is moving on the chart. You can look at that or this or just a regular chart if you really want to, but I kind of like looking at it while price is moving, because especially once I get to the convergence tool, I can tell you why it's kind of nifty to have. So I have this thing pulled up here, my strategy for market net flow. Hope you guys can see that. There we go. Yeah. So I've been using market net flow and data tools for about 2 years now. This platform has only been out for a little over 2 years, but the market net flow tool has only been out for 2, almost exactly. So this is a strategy that I updated in March 2023, which was how long ago? 7 months ago or so, which it might be due for another update for my strategy, but nonetheless, it's still relatively similar to what I look for every single day in market net flow, and I can show you today what I was looking for going off this strategy. So this is my updated market net flow strategy. It has an 80% win rate on average. Some of these strategies have remained the same for me ever since this tool came out, blah, blah, blah. Okay, so number one, what I look for, it's pretty important. So trading before 7 a.m. is risky, but never ruled out. So why I say that is I usually let the data settle. So if you look here, you can see, so I'm probably going to screenshot this so I can draw on it so I can show you. Hold on. Let's blow this up a little bit more. Okay. Make sure you guys can see it. Okay, so usually what I wait for in the early mornings, I usually wait for the first 15 minutes. So here's the first 15 minutes. This is the time 9:46 a.m. So it was roughly around this area in SPY. SPY was heading up, and you could see that call flow was heading up as well. So that's something that I really pay attention to. The first 15 minutes are crucial, whether I decide to get into it early morning or I just kind of let it go. There was a lot of times during the month of September where I just let it go because SPY moves really fast when it's heading down and flow has a hard time catching up. But on days like today, you can really catch really good moves. So I usually wait the first 15 minutes of the market. If there's a wide divergence between calls and puts, I tend to take whatever way flow is telling me. And if it's before 7, then so be it. I usually wait for a $5 million divergence on flows. So what that means is when there's a wide spread between calls and puts. So like you see here, it kind of got pretty close, but then it kind of broke off. And that was about $5 million about here. And I can tell you why I got into the trade about here, because it was spread apart. It was about $7 million in calls, and then about it was at zero, this put line here. It's easier to see when it's live. This already happened, so it's kind of hard to pinpoint it because of how wide flow got later on in the day. But I hope that makes sense. I wait for a wider divergence in calls and puts, and if it's greater than $5 million or more, then I tend to decide if I'm going to make the play or not. So let's move on to okay, that was number 2, finding an entry for a play. So this is more of like a personal choice for you guys. So if you guys use charting or EMAs or patterns, whatever you guys choose to do when you enter a trade, it's more of flow is more of like a confirmation tool to be using, not so much so trading it exclusively. Now I use flow pretty much as my main my main decision making on which way it should be trading. I hardly ever do patterns or charting of any sort, really, especially the type of trading that I do. I normally get in and out pretty quickly within the day or so, and I utilize just flow and then EMAs is pretty much all I do. I try to keep it as simple as I possibly can, because it can get confusing at times, and the simpler the better, in my opinion. So step 3 is just to find an entry. So if we want to give an example for today's entry, let me delete all these writings here. So today's entry was really good because I saw call flow heading up like this, and then we kind of went down and tested this 427 level, and you can see it here on the chart a little bit better. Right here, let me draw a line at 427 because it's not there. There's 427. Let me make sure you guys can see that. So there's the 427, and that was roughly around this area on SPY. So you can see we touched down here, which was a gamma exposure level, and I'll go over that shortly. But then we came back up and touched 429, and then we came back down to this EMA right here. And then that's when this convergence bar, and I'm going to get into convergence. So this is when the convergence flipped, and that shows strength in flow relative to price action, and that's when I got into the trade. So you can see we came up, touched it, and then we came back down and touched the EMAs, and that was my entry on calls. And what's great about all this, when all this comes together, that's an A+ setup in my opinion, and that's exactly what happened today. So it came back up and then retested, convergence flipped green, which is very bullish, and then it hit that EMA, and then we bounced and just pushed right through that 429 level to 430. So this is also the extra confirmation that I need to get into trades. Once flow lines up, as well as EMAs, we're above EMAs, and we've pulled back. It's a very, very good entry, especially when call flow is heading up like this, when you see it in live. So that's kind of like just my thought process on the trade that I got into. Now I could have held it for a little bit longer, but I mean, I was in that trade for like maybe 30 minutes, not even, and it was a really good return. So I just took it. And you can see we got another entry later on in the day with this one. It was an even bigger one. But once this convergence, which is the strength of price relative to flow, that was a really big trade right there. It caught pretty much that entire move from like 429 to 433. Okay, I feel like I'm long-winded, but I hope that makes sense. Does that make sense to you guys in the Discord? I hope it does. I feel like I'm rambling here. Let me know. Unmute your mics or ask questions or whatever. I'm all game here. I can show you examples of where it wouldn't work out too. Today was a really good day, but pretty much the one thing that I really look at is just the divergence between calls and puts. That's like the main thing that I really look at. But if it's choppy, kind of like it was earlier on in the morning, and it never breaks off, then that's going to be a choppy day. So I can give you an example of like what that would look like. There's probably one recent. Not that one. Most of these are pretty good. Okay, so like here, this is a really good example actually, because we didn't really break off until later on. So let me draw this picture for you. So this is what would be a bad flow day in my opinion. There's not a wide divergence here, you see that? There's probably only about a 3 or 4 million divergence just on this one, and that's about as wide as it got right there. But it kind of just flipped like nonstop for half the day up until puts broke out, and then that's when you saw the price moving down later on, when you saw the it got kind of close there. But pretty much for the whole day it was kind of just choppy, just because flow was really close together. There was never really a big lead one way or the other on that day, and that was on the 2nd of October, so exactly a week ago. Just go back to August and you'll find a ton of examples. Yeah, let's go back to August and see one. Was August a pretty bad one? Oh, that was a good day. That was an okay day. Do you mean September? You might mean September. Yeah, but that's basically all I'm looking for. So you can see here that there was a wide divergence between calls or puts on this day. It was like $15 million at the end of the day, but it was about 10 midway. But you could see we moved up on the SPY. So that's pretty much what I look for. And then I look for confirmation on the convergence tool. And then that's when you can catch really big moves like we did today. This was a good example day too, August 25th. Yeah, September was pretty rough, I'm not going to lie. Okay, so that's the market net flow tool. I hope I explained that pretty well. I haven't explained it for a very long time. It makes sense in my head, but it might not make sense in your head. So if you do have questions, you can ask me on YouTube, Twitter, or whatever. Where I'm going to post this video later too. So yeah, so let's move on to the gamma exposure tool if there's not any questions on market net flow. Yeah, Nick, there was a whole stretch about 2 weeks where I hardly traded, which was rough. September was a bad month for flow. I'm not gonna lie. It's just a hard time for flow to catch up on downward moves because it just SPY moves down so fast. The market moves down so fast, but now it's the opposite. The market's moving up very fast. So, okay, so let's move on to the gamma exposure tool. So this is these are levels that market makers use to dictate whether to hedge their position long or short. So I'm going to try to explain this as easy and simple as possible for new beginners because it's very, very complex stuff. But it's really easy to use if you think about it, but I'm going to explain it so it doesn't confuse you, I hope. But what gamma exposure levels are, dealers have to remain delta neutral and gamma neutral in their positions, right? They make their money through buying and selling, well, mostly selling options, but also through the fees that they dictate. So they're always going to be neutral in their positions. So if they're gamma negative, they have to buy back, whether it be, oh my gosh, I'm not explaining this well for beginners. Okay, let's just do an example so I can explain it a little bit better for you. So let's look at, actually let's take a look at a live one right here. So this is the SPY gamma exposure for all expirations. This will be a little bit easier to understand. Okay, so when there's positive gamma, this tool, it helps you understand where the levels are to dictate where price is going to be going, rejecting, or heading towards, because dealers have to hedge their positions in order to remain neutral in their positions. So you can see here that there's green bars and red bars. The red bars indicate negative gamma, and then the positive bars dictate positive gamma. So when there's positive gamma, price, the price of the underlying or the share price tends to reject or support off those levels, and then the negative levels are levels that price needs to move towards because the dealers have to hedge towards that position, if that makes sense. So to give you an example of a chart we're looking at here, this is for SPY. So you can see we have a lot of green to the downside, which indicates support, but we also have some negative levels further out from where we're at right now. So this is the 430, this little white bar. That just indicates that that's where price is right now. So that was a negative level. So you can see earlier today that we the price kind of headed towards that 430 level. This is where we rejected. So price head towards that negative level, 430, and we rejected it. And then you could see that there's more negative levels up higher. So dealers were forced to buy the underlying and drive the price up, if that makes sense. I hope that makes sense. It makes sense a lot in my head. But once you see negative levels to the upside past green levels, if we're above those green levels, you can almost guarantee that dealers will have to hedge towards that position sometime soon. So that's kind of why I'm remaining bullish and why I chose calls today, because dealers had to hedge their positions and push the price up. Flow was bullish, which is also another confirmation. We were above EMAs and we were above the 430 or getting close to above that 430 gamma exposure level. So since we're above that 430, which is right here, you can almost assume that we're going to be hitting these two negative levels since we're above them. So I'd have to say if we hold 429, which is the nearest positive one, which would be support, we should head up to 434 and 435, which are these negative ones, because negative gamma attracts price because dealers have to hedge towards those negative levels to remain gamma neutral. That is a lot. I understand. It makes a whole lot of sense in my head, and if you don't understand it, I'm sorry. Basically, all you need to know is how to utilize these tools. So I feel like just looking at that chart and just thinking in your head, okay, negative attracts price and positive levels reject price or act as support levels. That's pretty much all you need to know if you look at these charts. You don't really need to get into the more advanced stuff. Unless you want to, you can do a lot of research. But I hope I explained that pretty well. And this is the same chart as the 0DTE one. So this is one I look at weekly to look for levels, but you can also look at this one, which is pretty much the same chart. It's just 0 day till expiration gamma. So things tend to move quicker when you see these levels because these are option expirations that have to expire today. So there's going to be a lot of movement in those. So it's pretty much the same chart that you look at. But I can kind of share an example of what I was looking at here. So this is a really good one. So I know there's a lot of levels that you're looking at here. So let me just get rid of some of these that aren't going to matter so I can show you what I'm looking at here. Okay, so these three are really important. So if you tune out the noise on 0 day till expiration ones, you can see that this one was heading down. So that's a negative level. So 433 was a negative level, and that happened towards close. So 1500, what is that? That's like, yeah, what is that? That's like 12 p.m. my time Pacific, so 3 p.m. Eastern. So that's 3 p.m. Eastern. So you can see that 433 level really head down towards close, and you can see on this chart what happened here. So you can see that we almost tapped that 433 level. This yellow line is 433, by the way. So towards power hour, you could see that that 433 level was heading down, so dealers had to hedge their positions towards that level, and we almost hit it. It was within like 10 cents or so. I would call that a successful movement there. Sometimes it doesn't work, but sometimes it does. That's just the name of the game with 0 day till expiration things. The data moves really quick, but that's just an example of how I use it. So yeah, do we have any questions about that? I hope we do, because that was a lot. And then Nick, I'm going to answer your question about the Greeks on the option chain. Goodness, I'm just rambling. I hope that's not too much for you guys to handle. Let me know if you have questions before I move on to the Greeks. Okay, Nick's typing. I'm waiting. Opposites attract, yeah. Yeah, negative. Well, not really opposites attract, because there could be a negative level to the downside. It's not, it kind of is opposites attract, but say that there's a negative level. So like here, so this 425 was negative all day, but we never got even close to 425 gamma exposure. But why I ignored that level was because flow was super bullish, and I feel like flow outweighs 0 day till expiration things anyway. So normally if you see a negative level to the downside, so we were at 432 at close. So say that this was just a normal day and we're at 432, and then there's 425 negative level. Usually in my mind, I think, okay, if flow is bearish and we have a negative level at 425, you'd think that we're going to be getting towards that level or close to it. So it's not really opposites attract if it's to the downside, if that makes sense too. Okay, let's see. Nick probably has a good question. Does that mean it ought to come back to the downside? Yeah, that's what I kind of just explained. So if you look, it's kind of different with 0-day because this data is 0-day till expiration, so it's high risk data. But if you look at like this one per se, you can see that we have a lot of support around 429, and then we have 425 negative here. So I'd have to say it'd have to break below 429 to even like think about getting back towards 425, if that makes sense. Because there's a lot of positive gamma exposure levels around this. So 426, 427, and 429 also very good levels. And you can see we bounced up 427 perfectly, which was the middle positive level here. We had kind of a little bit of resistance around 429 at the very beginning of market, but we flow outweighed that level anyway, so we broke above it, and that's why I got into calls. Does that make sense? This is going to take another watch to really drill in the... Yeah, Muck, it's going to take a lot more than just one more watch, I can tell you that much. And I have no problem doing tons of examples with you guys. This is just like a pre-class. Hopefully I'm going to do more so you guys will understand it a little bit more, I promise. It makes a whole lot of sense in my head because I've been doing it for so long, but I understand that it's really hard for you guys, so just bear with me while I'm trying to explain it, because I'm trying to like date back to like when I first started learning it too. So, and these questions really help me to explain a little bit better to you guys too. So please ask me questions about it. Nick says, so it's kind of like highlights order blocks as well. Kind of, yeah. It's kind of like that. It's kind of like order blocks. I know a lot of people like order blocks because that's where the rejections happen. So, yeah, it's very similar because that's where dealers are they're going to be buying or selling. So it is kind of similar to order blocks. The gin has Muck says the gin hasn't helped. Yeah, don't drink and listen to this. I promise you will not understand it. Okay, so that I know that's a lot to cover, and that's just the basics of it, but I'm going to be doing a lot more classes on it with more examples and things like that to help you guys understand it, because you're not really going to learn it until you start utilizing it in your trading and seeing other people use it. And that's kind of why I go into Discord and I explain everything that my thought process is while I'm looking at the stuff. So if you guys have questions about like what happens during the day, just go into my channel and seriously just look and see what I say about the things that are happening as data comes out. I feel like that's very helpful. It's helpful for me, and that's partially why I do it, because I like going back and seeing what the data is doing while like my thought process while the data is coming out. So that's why I like documenting it, like every single thing that happens, because I can always go back and see what I was thinking during that time. The beer and the bonfire does though. Hey. Chill. Okay, so that's it. Market net flow and gamma exposure. Let me just answer one more thing for Nick here. He's asking about the option Greeks. So what gamma is? It's the rate of change in the delta, and it's going to be very confusing if you don't like watch a beginner video on what the Greeks are. But basically for options data, here, let me just pull it up here. So here's an option change for SPY here. Can you guys all see it? I think you can. So here's the option chain for SPY. You can see that we have the strikes 433, 434. This is close to the money. And then actually let me move to the 10th because it's a little bit easier. Hold on, I can't move this down. Why can I not see the... Hold on guys. I might have to blow this up. Oh gosh, I'm messing this all up. Hold on. Why does it look like that? It's all messed up. Okay, there we go. There's the bar. Okay, so delta is the rate of change of the option price per dollar move. So let's say that SPY is at 432 now, and we buy a 433 call. So that is 116 per contract, so $116 per contract. So say SPY moves up to 433.29. So what the delta is, so it's $40 per contract. So idealistically, if SPY goes up $1, the option contract should move from 116 to 156, if that makes sense. So since the delta is 40, since the delta is 40, it should increase by $40 per contract, so it would be 156 per contract. But then you have gamma, which is the rate of change in delta per dollar move. So if SPY goes up to 433, the gamma will increase the delta by 0.10. So that's why dealers have to be gamma and delta neutral, because there's always change in the option contract with delta and gamma. Now there's a lot of things that goes into that, so I suggest going through a beginner video on the option Greeks. But that's basically what that means. I normally just look at delta and then theta. I don't really look at the gamma, because gamma is just the rate of change in the delta per dollar move. So if SPY moves up $1, so will the delta. The delta will increase to 50. So since the delta is 0.10 and SPY moves up $1, the delta will now be what is it? See right here, the delta will be 0.50 instead of 0.40, if that makes sense. Should make sense. Or sorry, since this is a contract is 0.11, it would be 0.51 after the dollar move. So it just makes your contracts more valuable if price goes into your favor, is all it does basically. Gamma is the derivative of a derivative. Yep. It gets very confusing, man. That's why I don't explain it very much, because it's just crazy to think about. But all you need to know for delta is just the rate of change of your option contract, and then per dollar move, and then the gamma is just the rate of change of the delta per dollar move. The derivative of the derivative. But that's gamma exposure, and all that's calculated through complex algorithms. I couldn't even explain that to you, but that's how we get the gamma exposure levels, because of all the option contracts that are going through the market at one time. There's hundreds of thousands that go through it a day, I'm pretty sure. So yeah, it's complex stuff, guys, but if you learn how to use it, that's pretty much all you need. And that's kind of where I'm at. There's a lot of things I don't understand about option data, especially the Greeks and all that kind of stuff. It kind of goes over my head. I understand it enough to understand how to utilize it, which is all you really need in trading. So yeah, that's a little brief explanation on option Greeks there. Okay, I think that's it. I think that's a wrap. Well, we're at 32 minutes, almost right on the dot. 30 minutes. Perfect. Okay, if you guys have any questions, please let me know before I tune out here. I'm going to be posting this on YouTube, and then I'll post a link for you guys, so don't worry. Gamma, trend, regression, variance, price, delta, gamma. You kind of got the hang of it, Nick. You're getting close. I'll wait a couple minutes. I'll wait a minute or two so you guys can type out some questions if you have them. Okay, let's move this back up if I can. I have my Webull thing up there. Okay, and here, and then let's see what I did here. There we go. Mr. Nice Guy, I do most of the time only trade SPY, yes, because I utilize this data, and I'm very, very comfortable trading SPY, and I don't really trade anything else. Now there's other things, there's some single tickers that I've traded with in the last couple months, but that's for another video, and I can explain that in another video if you want me to. But yeah, for the most part, I normally always just trade SPY. See a couple more questions before I head out here. I see you guys typing. It's Mr. Nice Guy says, I like your simple and effective approach. It can be simple, but it can also be very complex, and that's what kind of why I'm doing this video. I don't want to confuse you guys, seriously. Like, this is probably one of the most simple ways I can explain it, but over time you guys will understand it more, I promise. But yeah, for the most part, I think it's pretty simple. if flow is divergent, I choose the way that flow is going because that's where all the smart money is going. I utilize EMAs and then the convergence tool down here and those gamma exposure levels that you talk about too to find my exits and entries too. So you can see here we got some perfect entries and exits off these gamma exposure levels. One here, and then we got a really nice one here. Now we could have caught this entire move here if I would have held calls, but still a good exit there and good profit anyway. So hey Ross, I appreciate your feedback there. Thank you. All right, if there's no more questions, I'm going to be posting this on YouTube soon. So yeah, if you have any more questions, just feel free to reach out. I'll be doing more of these more often. So thank you guys for tuning in. 35 minutes. It was fun. Thank y'all.